Last week, I made a video about exit confirmation that you can add to your trading plan. And I made a graphical representation of how you can recognize the exit pattern. And I was asked to do a full explanation about it. And so this is what I am giving you in this video, guys. I'm going to be making a full explanation of the exit confirmation, the two types of exit confirmation that you can add to your trading plan. Now, take note that you can use this exit confirmation on any financial markets that you trade, both synthetic indices and currency pairs. Even if you trade crypto, you can actually use it on crypto as well. Currently, I'm on Think Trader, created by Think Markets. It's like a trading view created by Think Markets, and I am using Think Market synthetic indices for this particular explanation. So if you want to create an account with them, there is a link in the description. You are able to trade both currency pairs and synthetic indices on their platform. So let's go straight into the two types of exit confirmation that we're going to be talking about. So the first one is what we call counter change of character. So it simply means that if market is trending to the upside, if we have a trend to the upside and all of a sudden market just gives you a counter change of character, that is an exit confirmation for you. When market is trending to the downside and then you also see a counter change of character, it automatically means that you should go out of the market. So if you see it on the 5-minute time frame, on the 1-minute time frame, 2-minute time frame, we have a change of character to the upside when market is trending to the downside and you are in a sell movement. It just shows you that you should go out of the market. As much as change of character could be a liquidity at a particular point, but you cannot tell for sure which particular place is going to be a liquidity and which particular place is going to be a real change of character, except of course if you already master your liquidity perfectly. And the second one is what I call liquidity shift. What this means is that if we have market trending to the downside and then you find out that market comes back and take liquidity, maybe turtle soap or whatever you might want to call it. Personally, I call it external liquidity. So when market gets it taken out, when market takes out your external liquidity and you start seeing a change in market structure, it automatically means that you should go out of the market. It is an exit confirmation for you. So I'm going to be showing you these two things on charts right now. So let's look at this market together. This is TM crash 600. As you can see, market is trending directly to the downside, and our last break of structure is definitely to the downside here. Now after this break of structure, you're definitely expecting that market is going to come back to this fair value gap, of course, for us to have a reaction for a sell continuation. So I'm going to be marking this area out as my point of interest. This is my breaker level, so I'm going to be marking it out since it is joined with fair value gap. So I'm just going to be marking out this area as my point of interest, and immediately market got to this point of interest, I'm going to be looking out for a sell continuation. Now if I got my sell correctly from here, and then my stop loss is above this high, it is going to be about 1:3. If this low is not going to give me 1:3, I'm just going to drag it a little bit to the downside, and when market takes out this particular low, I'm going to take my partials, but I want market to give me at least 1:3. Market started giving us a move to the downside, and all of a sudden we had a counter change of character at a very good zone. You can see that this is a sponsored candle for us here. This is a sponsored candle here that carried a fair value gap, so it is a good area of reaction, and market all of a sudden gave us a change of character. Now after this change of character occurred, I am out of the market, no matter how sweet that setup is, no matter how long I think market should sell. Since we had a change of character here, this is a counter change of character, and since market has not taken out this low before coming back to take that internal high, I am not very sure about that sell movement to the downside again, to go out of the market here and wait for what market is going to do, if it is still going to use this point of interest for sell continuation or not. And you can see that after market gave us that change of character, which is a counter change of character, you can see how market has been trending impulsively to the upside. Imagine you did not exit here. Market would have given you profit and come back to take out all the profit and even give you loss. Let me show you the second confirmation, which is what we call liquidity shift. And what does this mean? It automatically means that when market takes out your liquidity and then it starts giving you a reaction to the opposite direction, you should exit the market. This is a typical example of what I am saying. You can see that we had a counter change of character to the upside there. There was a counter change of character to the upside. And let's just assume you were able to get a buy movement right from here. You were able to get a movement to the upside, or even if you are unable to get a movement to the upside. So let's assume you were able to get a particular movement on lower time frame to the upside. You can see the market was coming back to hunt this liquidity. This is what we call our primary inducement. I made a video about primary inducement. It is on my channel, guys. So you can see the market took out this particular inducement and it started reacting impulsively to the downside. Time for you to say you want to continue this buy setup from here, because market only came back for the liquidity here. Market came back for the visible and obvious liquidity here. And after taking it, you can see that we started pulling to the downside. Now, that should not mean you should start looking for your buy setup here, because we had a counter change of character. And you can even see that when markets got there, it gave us a reaction to the upside, but that reaction cannot be sustained. So it is very important for you to also use your eyes to see liquidity in the market. Market came back to take liquidity here, in as much as it gave us a counter change of character. And of course, if I was selling around this place, if I was selling from here, I would have taken out my profit when market gave me this counter change of character. You can see that it is very key for you to see liquidity in the market, and it is very key for you to also use your eyes to see structure. Look out for counter change of structure. Look out for counter change of character. Look out for liquidity shift side. Add these two confirmation to your setup. Add these two confirmation to your trading plan. You would find out that you are closing more in profits than in loss after market has given you good movements. If you have any question, or if you still do not understand everything I have explained, drop a comment. I'm going to see you guys in the next video. Bye, guys.